Is a walk in the park for two fledgling designers presenting for the first time at New York's Fashion Week. From idea to major industry events, next on Your Business. You've got just a little more time this year to think about ways to pare down your company's tax bill. So joining me in today's Consultants Corner is Sandy Suchoff, a certified public accountant who's here to tell us about some ways to save money when it comes to paying Uncle Sam. Thanks so much for joining us.
Oh, thank you for having me.
So we're getting to the end of the year here, but there are definitely things that you can do, right?
Absolutely.
And well, let's just start going down kind of the list that you gave me. One of them was increase your expenses. How would you do that?
That's right. You can decrease your taxable income by increasing your expenses. If you foresee a need in the beginning of next year for supplies or services, why wait? Purchase them now.
And so make sure you kind of do an analysis whether it makes sense to buy it next year or this year. Then.
Absolutely, of course.
And this could be any kind of thing that you need to buy.
Well, office supplies, or even if you're a cash basis taxpayer, you can prepay your magazine subscriptions, or book your travel plans early, or even renew your equipment repair contracts now rather than waiting to next year.
Oh, that's interesting, because those are some things that you don't need them right now, but you can still pay for them now.
That's right. Well, you will need them.
But you'll need them a little bit later on.
Right.
Okay, let's flip to the other side, which is defer income.
Right. Depending upon your tax situation now and in the near future into next year, it might make good sense to defer your income. So maybe you can wait to render a service or to sell or ship a product so you recognize the income next year.
Okay, writing off inventory?
Right. Inventory is a thing that's commonly overlooked. When's the last time that a business owner or management has looked at their inventory for either obsolete items or damaged goods? Depending upon how you file your taxes, this reduction in inventory can increase your expenses and, again, lower your taxable income.
Okay, and then the very last one we've got here is contribute to a retirement plan.
Right. For even those people who don't have in their business a retirement plan, it might be a good time to establish one. Typically, you have to the end of the year, December 31st, and depending when your business tax return is due, or if you file extensions, you don't even have to fund it till as late as September or even October of 2007, so you can get the deduction now.
So you establish it now,
right?
You don't have to pay anything out until next year.
That's right. And also for small businesses that qualify, they may be eligible if they start up a new retirement plan to get a tax credit up to $500 for the first 3 years for the cost of establishing and maintaining the retirement plan. And a tax credit is preferable to a deduction because you get a dollar-to-dollar reduction in your credit,
Great,
in your taxes.
Thanks so much for coming on the program.
Thank you.
That was great advice.